Hey guys, today I would like to take a look at what's in store for dividend investing in 2025. Will dividend stocks recover whipsawing that they saw in 2024? And should we be concerned with Trump economic policies and their effect on dividend stocks in 2025? So let's take a look. As you know, many dividend stocks underperformed the broad stock market in 2024. If we compare some popular dividend ETFs like SCHG, VIG or VYM to Vanguard Broad Stock Market ETF VTI, we see underperformance in the range of 2 to 8%. That's material. SCHG alone declined by over 10% in November and December. One interesting observation is that 10-year interest rates for treasury bonds went up over the last 3 years. And yet many dividend ETFs are up either on a total return or price basis. The reason I'm pointing it out is this. There's this notion among dividend investors that interest rates and performance of dividend stocks are inversely related. In other words, when interest rates rise, dividend stocks should go down. Based on historical observation, this relationship does not always hold. There are many other factors at play that may compensate for interest rate changes. And stocks appreciate based on earnings performance. And so interest rates are not at the top of the list. Just something interesting I wanted to point out. But the biggest explanation behind this underperformance can be put into one word, and that is tech. Exposure to tech among broad market indices such as S&P 500 produced better returns compared to dividend stock ETFs. If we look at dividend ETFs, exposure to tech ranges from 10 to 20% compared to 30 to 35% for S&P 500. Nvidia alone has appreciated by almost 180% since 2024. True, Nvidia is a dividend stock, but it's a low-yielding one and many dividend ETFs excluded. So yeah, not owning those top performers was a big detraction for dividend funds. But there were some specific reasons that caused dividend funds to underperform in 2024. In my previous video, I covered some of them for SCHD. Many dividend stocks are in the energy and healthcare sectors. Their performance has been stagnant or even declined by the end of 2024. Oil prices remained volatile and are on average lower now compared to a year ago. This didn't bode well for energy stocks. On top of it, there is some anticipation that Trump may succeed with his drill baby drill promise. As for healthcare stocks, the market feared that electing Trump is negative for them. True, other sectors like banking and utilities did more or less fine, but that was not enough to offset weakness elsewhere. At the same time, there was some good news for dividend investors in 2024, namely some big tech companies like Meta, Alphabet, or Salesforce announced dividends. True, their dividend yields are very small at around 0.5%, but still it shows that these companies have cash flows that are stable and large enough to sustain payouts to investors. And if we look at large US companies at the top of the list, only Amazon and Berkshire Hathaway, they don't pay dividends, but who knows, that may change too. If we look at S&P 500 companies, share buybacks still remain a favored way to return capital to shareholders. For 12 months ending in September of 2024, S&P 500 buybacks were $918 billion. Dividends were $616 billion. It's understandable why share buybacks are more popular. They offer a higher level of financial flexibility compared to dividends. So, for instance, if you initiate a dividend, it's not that easy to reverse or decrease a dividend because the market will not take this decision lightly. On top of it, share buybacks are more tax advantageous compared to dividends. So the way I see it, it's very likely that companies will continue favoring share buybacks going forward. So with all this in mind, what will 2025 bring to dividend investors? The driving force behind dividend growth is earnings growth. According to Goldman Sachs, S&P 500 companies should see 8% growth in earnings in 2024. They also expect earnings growth of 11% in 2025, which is even higher. Of course, it's a forecast and things can change due to various headwinds, such as tariffs. The thing is this. There is a lack of several quarters for earnings growth to materialize into dividend growth. So it's very likely that dividend growth will resume in 2025 after a good year of 2024 earnings growth. Here's a table showing where dividend growth will be most pronounced for the S&P 500 companies by industry. We see that industrials will lead the way. Energy will witness slight decline. As you may know, dividends play an important role in total returns. Total returns consist of price appreciation and dividends. Historically, dividends accounted for almost 40% of total returns for S&P 500, but more recently this number went down under 20% for the past 10 years. The reason for that is this. More tech companies with little or no dividends made their way to S&P 500. Lately, S&P 500 looks more like a growth index rather than some blend of value and growth. So it's understandable that dividend investors are looking beyond S&P 500 for yield. As we saw, the financial sector is poised to show dividend growth in 2025. Banks, asset managers performed very well in light of strong earnings growth lately, and some of them are large dividend payers. Take JP Morgan Chase, for example. The stock yields 1.9%. Last fall, the company increased its quarterly dividends by 9%. But looking outside of S&P 500, it is possible to find even better dividend growth rates. On top of it, we should not forget corporate taxes. Trump is gearing to extend or amend the Tax Cuts and Jobs Act, which is set to expire in 2025. The reported reduction in corporate federal tax rates could be from 21% to 15%. It's not as large as it was before, from 35% to 21%, but still it can materially boost returns and dividends beyond 2025. After the Tax Cuts and Jobs Act got passed in 2017, it pushed dividends and buybacks in 2018 to multi-year highs. So there's a high chance of tax rates going down with Republicans' control of Congress. As you may know, dividend growth slowed down big time in the fourth quarter of 2024, and the likely reason behind it is that there was some uncertainty with elections or economic policies. But with that behind us, there's a pent-up potential for growth in dividends again, and we don't know where interest rates are heading. Once the Federal Reserve tames inflation, there's a possibility for interest rate reductions. Will it happen in 2025? Well, I don't know. But if it does, there is a potential for valuation improvement for dividend stocks. While I reserve the right to be 100% wrong, 2025 should be a good year for dividend investing based on my research. With tech stocks having clocked massive gains, their valuation multiples look stretched. And with that, investors may start looking past growth and see value in dividend stocks. Who knows, but maybe 2025 will be a year of rotating out of growth and into dividend stocks. That happened in 2022. If you would like to continue getting updates on the market and dividend investing, subscribe to my channel for more actionable content in the future. And I will see you next time. All the best!